Well, hello everybody. Today is 21st of January 2019. My name is Mila. I'm the owner and director of Volume Expert project, and today I will try to introduce you our new technology which was developed by our company a few years ago. Now this technology already tested in my favorite project, Trading Room, within 5 years, and it gives fantastic results. First of all, a few words about Volume Expert project. In my opinion, the key to trading power in a new informational age depends on the ability to collect, process, deeply understand, and integrate into the complex systems all market information and all new technologies, and that's what Volume Expert about. Each project has to be based on the new authentic idea, bear new opportunities and resources for their partners and clients. Our project has such idea. It's our unique statistically contextual technology, the technology which is already bringing tremendous results to traders, the technology capable to turn your perception of market processes and to bring you with a truly successful trading. Today we shortly, of course, very basically we'll talk about a key principle of our technology, about innovation and advantages of this concept. The webinar includes only basic aspects, as I told before, and the basic ideas. Content is not intended for the beginning traders, but I'm sure that the most significant ideas will be clear to anyone. In the future, we can organize several webinars for beginners, different levels, also series of fact-finding webinars mentioning various segments of technology. But today, for bigger and better motivation, I decided to start our webinar from showing you what kind of results the traders who is using my technology managed to achieve. Now you will be able to see several transactions for several years on various of tools, and of course you will be able to see more information about our trades in our page on Facebook. Here in this picture you can see the synchronization of several traders who bought futures CME S&P in the same time on the same level, which I think clearly shows that it's exactly technology. It's not like random results suddenly came over from somewhere. It's absolutely technical approach to new technical approach to make decision, the right decision on the market. As you can see, distinctive feature of all transaction is improbable accuracy, which give us opportunity to pick up, to get into the point of no return, how I call this, and it's of course reduce risk to 4 ticks on future CME S&P, 8 ticks for euro or oil, and these results and this accuracy is very important, I think, for screen traders, for traders who have to be very accurate on the market. So different years, different instruments. Here you see future CME S&P, oil, bond, and the last recent trade on oil. It's a beginning of the year, 8th of January. So I think these kind of trades are very interesting for each screen trader. And of course now we got a question, how we could get these results. How comes that we can get such entrance and such get out of the market with the most professional approach which I ever saw. First of all, I have to tell that we are not guessing the price movement. Mostly we identify the market structure. We work with the statistical compliance and statistical divergence. We use line time analytic and through time analytic to recognize and evaluate activity of large player, of big trader, of and big money, like professionals say. So we follow big money, we make decision on the side of big money, and that gives us such a result. But these general words, of course, have a lot of things behind them, and to start to understand the deep tools, old tools, and deep meanings of the technology, I would like to give you short, very brief historical base. First of all, like everybody, we start with ordinary old technical analysis, which was based and visualized by bar chartering, candlestick chartering, and line chartering. However, two things made a huge impact on creation of my technology. First of all, it's complete changing of standards for exchange data from the previous one, yeah, the classical one, to volume quotation. And the second point, which was in the base of technology, is my acquaintance with the market profile. I will talk about it a little bit later. So modern ways of providing information gives us more opportunity to see the statistic of volume and the information, so information statistically verified, and it's of course more clear for any traders where the big money get in and get out of the market, and this gives us objective information about, for example, support and resistance and other things. Now a lot of platforms provide this kind of quotation, but I prefer, and during this presentation I will use a Wolfixnet platform, as I was a part of team of Wolfixnet, and within 3 years the director of Russian company distributor of this platform, and exactly this gives me understanding of volume quotation, and I hope you will like the platform and interface, and it is a very good product indeed. So the second step, as the second point, as I told before, rather than volume quotation, was market profile, and Peter Stedelmeier, which I made my own research of this technology, and I found it very interesting, of course, with a huge usability. However, I have to tell that my approach and our technology is absolutely new, authentic, innovative. It got some ideas that completely new and new stage, I would say, new evolutionary step of market profile technology, and this create and gives the traders not only some superficial understanding or superficial steps how to trade and how to make decision. It's whole intellectual environment where you can create your strategies, you can use all kind of time frames and all kind of instruments. So what I was attracted by in market profile, actually 3 points. First of all, it's the point of view, the idea, and the most interesting things that we have to see the market like double action. And here in this topic, with this idea very close, connected 4 phases model, which we talk a little bit later about. Second things in market profile is idea of failure, and the third is very important, is timing. So based on these 3 ideas, I start to create, to build absolutely new concept. Of course, the volume quotation and for example, Wolfix with the database allows us to put statistic inside the volume area. So we can use database to find average statistic numbers for point of control. And of course, everybody or most of volume traders now use these I would call them primary statistic compliances between point of control and positioning of point of control. When we the rule of market profile, one of the rules of market profile is when the market open above the value area and it's able to hold the value area high, it's the sign of buy market. Yes, it's a kind of a bullish signal. The same, but for the downtrend, the same. If the market open from the point of control or behind the value area and start to move down, it's a sell signal. With as I told you before, we can use the statistical approach. We can find a statistical compliance between the number of point of control and volatility. However, when we collect average statistics for example, different kind of intervals, for hour, for day, for week, for contract, it gives us not only idea of liquidity or objective interests on the levels, on the different levels, but we can put all this number in the filters, in graphs, and that's how it looks like in live platform. So the blue marks, it's exactly the my filters for futures E-mini S&P, which shows us point of control above certain number, of average statistic. And most of the market guru and traders based their strategy only of this rule that market goes from one volume area to another volume area, and statistic of point of control they use for understanding how far the market will move. For example, here we can see value area and point of control, next interval open above the value area and move up shows us the buy preference, yes, so bullish market. And in this example we can see that value area positioning like buy area, yes, so all the volume which was traded inside the volume area showed by next interval like buy, because it's stand on the point of control and start to move up. This is the exactly the primary statistic compliance. But when I studied different kind of platforms with volume quotation and market profile, the point is that everybody everywhere teach and show the market from the small intervals, from day trading. However, in my opinion, the most important is macro model, to see and to understand big play, to see and to understand what big traders do, what they are playing, what kind of script. And the most important is to understand that that two examples which we just had a look obviously means absolutely different things. Even volume area in the first example and second example were positioning in the same way, but the context is different. The first example it's in the low, and the second example in the other situation, and that's all about contextual thinking. Because when you see the holograph, for example, like here, you can see a lot of blue marks, filters, which show statistical improvement. Yes, so filter means that it's more than number which I put inside the filter. But how to understand where we can use it or where we shouldn't use it, and what does it mean in this position, how we can recognize this activity, and that was my question, and trying to find the answer on this question, I start to think how we can build context for this statistical compliance. And market profile, I found very nice idea, which was 4 steps, phases of action. Market structure, I found this idea absolutely genius, because it's describes all the situation on the market in each time frame, because it works like fractal. So it doesn't matter if you are day trader or swing trader or trying to find a long-term position, it's all the same, because first phase is impulse. Impulse, where of course, for example, by impulse, the numbers of buyers and traders who are trying to buy much more than sells, and they move the price up till nobody wants to buy. And of course, in that point, like in market profile said, we arrived to response reaction. However, response reaction plus statistic of volume gives us idea of fixing. fix. That's how I called it. Impact fix gives us a statistical compliance between volume of fix and volatility. And after that we have second phase, second step, respond reaction fix, and then balance. It's a third step. The third step include a lot of interesting things which we discuss maybe next time, because in my technology I made the structure of balance too, and several segments of balance. It gives us a lot of adventure and opportunities to trade carefully even a balance area. And consider the four phases structure. Then will be the impulse in the same direction or reverse. And inside the initial activity, I put the idea of statistic too. So basically I digitized all the step of this four phases of price action, and that gives us objective valuation and objective assessment of each step of the market. Then we have primary covering, retest, and realization. Now when we have this structure, when we look at the market, we immediately understand how to work with these filters, how to use them, how to recognize inside all the activities of the big traders. And then we have the small short resume. Which kind of type of analytics we have? Quantitative and contextual. That's how I called it. Quantitative, it's kind of analytics where the traders and coaches use only statistic of volume, volatility, and time, which is already much more better than old-fashioned technical analysis. But when we put these quantitative parameters in contextual area, we can get absolutely different results. And contextual analytics has two parts: line time, it means identification, valuation or assessment, choice of importance in one time frame. Means that in one moving line time frame. And through time analytics, the most important and interesting, innovative things, which was absolutely mine idea, where we make identification, assessment or valuation, choice of the importance in different time frames, or I would say in connection between different time frames, from up time frame, from bigger time frame, and here is very important point, till small time frame, till day time frame or even less. And in this screen you can see the basic idea of my approach. So it's much more deeper than it can looks like in the first moment, and very in the example which we already saw, now it starts to be instead of chaos and start to be very structured. Remember, here was our first example, and here was our second example. Now we try to use the market structure and first level of contextual analytics. First level, it means that we use only a primary statistical compliance in this work. So we're working in contextual analytics in line segment. So it's not through time, it's line. We are working in 1 day time frame, and entire period must be around 2 years. What we have: impulse, impact fix, balance, repositioning, primary covering, retest, realization. It's the end of the cycle. And again, impact fix, balance, and other steps like it always happen. I have to tell you, and I have to show you several examples on the different time frames. Now we have a look in 1 hour, so means contract perspective, and the rules are the same: impulse, impact fix, balance, repositioning, primary covering, retest, and then realization. And here we go, 15 minutes. It's a 1-2 week perspective. We use this time frame for 1-2 weeks perspective. Impulse, fix. So now all kind of filters you can see on this chart, on this graph, we put in context, and we understand that if this volume positioning by market like by volume after impulse, it's impact fix. We never trying to guess. We don't guess. We identify the facts which already happened on the market, and this gives us absolutely different state of mind. No need to guess, just identify. When you teach and you study very well to identify and make the right assessment valuation, then you can start to study how to use it. But by now we are on the step of identification. So impact fix, balance, repositioning, initial activity plus volume plus good timing, primary recovering, retest, realization. And even day structure can show the same steps. Here you can see the box chart of volume of Wolfix platform. It's a very nice instrument for tactical for tactical action, and it's again future CME S&P, impulse, impact fix, balance, repositioning, retest, realization. As you can see in all kind of instruments. Now I want to show you the oil, but the structure will be the same. 15 minutes time frame, impulse, impact fix, balance, repositioning, primary covering out of the screen, retest, realization. Futures euro, and it's intraday. Steps: impulse, fix, balance, point of control inside the balance. So the balance is very important, the level is very important. Repositioning, so the circle of reverse, that's how I call it. And all these example examples shows us how the four-phase models works when it digitized. When we put statistic in each step of this model, it gives us objective reality. No need to guess, no need to trust to other guys' opinion. You just need to collect statistic using the database. And in the end, in my technology, there are only 4 key tools. First of all, it's phases, structure of the market, inline analytic and through time analytic, digitized. So we use only statistical compliance and discompliance or divergence. Then macro statistic. Macro statistic, it's exactly about value area, point of controls, numbers on this data, and as you could see in the examples of the reverse value area of interval, most likely inside the balance, and point of control shows us how many volume we have inside the balance, which gives us kind of muscles to this structure. Then third steps is statistical compliance inside the action context, and after that it's timing, because of course the structure gives us a rhythm, impulse, balance, impulse, and the question of timing is a big question of my technology. I promise that soon I will prepare some open webinars about this topic, just to give you basic ideas how timing can help you to find that kind of point of non-return deals, which you saw in the beginning of our presentation. So the short result in a key principle of our analytical and intellectual environment: we never guess. We made identification through action phases, trying to recognize and use presence and activity of long-term trader. We make an assessment, evaluation of after this identification, and only after that we choose the action of importance. We make a choice and we make the project. All this has a very deep target: to use action of specialist or long-term trader. So sometimes I discover for traders it's very hard to forget about themselves, forget about your own ego, and try to concentrate on big money, what they do. You have to do the same, and then you have to optimize your tactical behavior with our instruments, because the advantages of new technology are tremendous. Contextual and hierarchy thinking based on statistic, and statistic is not about guess, statistic is about facts, and it gives a very good support for decision, for fix and for minimize your risks. It's ideal tools for discover specialist and long-term trader. The technology is universal and formalized, and as we spoke before, minimize risk till 4-5 ticks. And also, even if I pick up some basic idea, philosophical, I would say, ideas from market profile, invent a lot of new things and include it in the technology. And the most important, in my opinion, is the idea of through-time analytics. Later I will try to show you a short example about this, how it works and how we can use it. Then the pure innovation, it's segments of balance, segments of impulse, types and structure of fixing, types and structure of response activities, types and structure of initial activity, days types, absolutely new point of view of day trading, weeks types, timing of different traders, and actually general topic of timing in my technology is improved and gives fantastic results exactly on that kind of very accurate trades. Cycles of structure, inline analytics, and rhythms of different periods, and finally, like a result and the most professional topic of all technology is protocols of tactical reaction trading. So we don't trade randomly, we don't use intuitional trading. I think that for screen traders it's absolutely not appropriate to use intuitional trading or old technical analysis in this time when we have such a powerful tools. Before I go to show you the live platform and some short examples how we can use and understand through time analytic, I would like to answer the question which obviously will arrive in the end: how you can start to study the technology, how you can start to understand all these things and much more new interesting professional things which of course I will not be able, I am not able to put in one presentation. First of all, I would suggest you to study lessons of Chicago Board of Trade of Market Profile. It's our philosophical base, I would say. Then to get to know some materials in our website, volumexpert.com. Then try to study these records and other records which we will put in our YouTube. Also try to get to open free webinars which we are going to have in the nice schedule, and then try to get a place in the next group of basic level course. And what is about the basic level course? What will you learn from basic course? Of course, first of all, we will learn all function and instrument of the Wolfix.net platform. But the most important in these 10 lessons of basic course, and by the way, each lesson will be recorded and you will have access during 30 days, and you will be able to listen and study the content as much as you want. And after each lessons we will have a lot of tests, homeworks, trainings. All these will give you deep understanding of market structure and mechanism of market development. So you will learn how to treat, how to enter into the market context, and how to use the data of volumes and other statistical parameters, because I always say that our technology is not only about volume, it's multi-dimension. absolutely sure and already tested that if you based your decision only on one parameter, it's like you cut 60% of information. So we use the statistical compliance in various time frames and all kind of instruments. Then, of course, we will study how to prepare your week plans, day plans, trading, how to use all these 4 steps, 4 phases structure, and how to use volumes data in a different stage of development of the tendency. It's how to use volumes in impulse, how to trade impulse, how to use volumes and statistical compliance in balance, because obviously that your behavior in impulse cannot be the same like in a balance. And actually in the end you will receive new coordinates, new environment to design any kind of strategy. You awake to know about all tools of our technology in this basic course, and this knowledge will change your perception of the market forever. What is the difference of our system of training from others? This is another very important things which I would like to discuss and to talk about. First of all, I teach deep principles of development of the market, of understanding the market, not superficial rules. And of course, it takes a lot of efforts from me and from my students. So you have to be prepared to work hard to get that results which you saw in the beginning of our presentation. We use the newest principle of training, informational transfer and transformational of new information into acquired skills. So it's of course a lot of tests, training, online discussion, predictive analysis, and what is the most interesting and the most important is individual approach. By a lucky chance, I'm very empathic person, and I have this ability to synchronize with each of my students and to optimize the process of studying, because all of people, they have different kind of mind, of visual, of understanding, and it's very important to be connected with the students to give them exactly that angle of information which he is able to understand. And the all contents are very logical, unique, full of absolutely authentic information. So I think if you have any question about the technology, about how to start to study it, and when will be the next basic level course, please don't hesitate to write us and to call us. I will try, we will try to support you with all the information, and we will try to give you as much support as we can. And at the end of today's meeting, I would like, as I promised, to show you on the live platform, and this is the Wolfix platform, some more examples. And these examples which I prepared is consider this deal. I showed this trade in the beginning of the presentation. It's oil, it's 8th of January 2019, and just very light version I would say light version of technology process, how it works, and it's perfectly goes with today's topic. Okay, this is oil 50 minutes time frame, and this is reverse. So let's have a look. Impulse of this time frame. Then we can recognize fix, contradirectoral activity, which shows us impact fix for this time frame. Then we can see balance, absolutely perfect, like it was on the scheme. And then we can recognize repositioning. So repositioning means new initial activity with volume, with statistical compliance of repositioning, because we digitize each step of price action. Then primary covering, and then retest. Now we have realization. The deal which you saw on the screen is here. In this day, 8th of January, approximately this time. And the point is, technological point is that balance was already built for the beginning of the week. The only question which was on Monday, if repositioning start right now, or it will be going and will be built like new activity of professional sales, and the market goes inside the balance. But Monday is stand and stay on the support line, which gives us the perfect idea that the reverse started. Then we normally use like tactical instrument box chart, where we can see all the small ticks and small volume activities, and in different time frames we collect it here. Local, I would say local support, and it gives in the second part of our opportunity to buy, the moment where our 15 minutes reverse started. And this kind of deal, of course, the result of a lot of education, a lot of studying, but you can see that it's possible and absolutely reachable for everybody who wants to understand and study my technology and to use it properly. But the most important on this example is a context, because the context of macro model is the very important level, and that makes our decision absolutely adequate, absolutely perfect, and that is already contextual thinking of second level. We put in the context not only statistical compliance, we put in the context structure, We put in the context reverse. But why is this level so important? Because it's structured level, and I would say that each level you see on my screen, it's not only support and resistance, it's hierarchy build levels, which shows us grid of probability paths, and they build, as I told before, on the structure idea. For example, 45 and 5, it builds like impulse, primary covering, retest, realization, end of the cycle. End of the cycle, and of course this level of primary covering is very important, historically very important, and here in this, at this level, all our situation was built, all this balance was created. We see all kind of steps during this balance developed, like activity of by professionals, and fix and make stronger each level of support, and finally repositioning. And it's only very small, very light example, and in the future, of course, I will try to show you more examples, online examples, how it works. But again, last week, for example, now we know which step market will go. After primary recovering will be retest, realization. So we know the structure, and we know what we are searching for. We are searching the reaction of the market and big players on the retest. And again, Monday, Tuesday, Wednesday, Thursday. Monday, through overnight volumes, we can recognize existence of big player, and it's bot volume. We don't have to guess. After this bot volume, it was the volume was positioning during the overnight, and Tuesday gives us opportunity to make the decision to buy, retest, realization step on the level where was activity, important activity of big players previous week, and where the Monday build the support. So when you know what will be the next step, you need to find only some supporting new information in the moment when you make a decision. After that, everything is done, and you can make good trades without much risks. And how to minimize the risk, it's another interesting and huge topic. Of course, we study it in a basic course very deeply, and probably in the next few open webinars I will tell about this more information. And another example about through time analytics, it's futures for 4-year mini S&P, its current situation, huge balance where we can see impulse, then we can see impact fix. Impact fix brought us counter-directorial activity. However, if we have a look inside this impact fix, we can see in the 15 minutes interval, we can see reverse. And that makes absolutely huge difference of understanding of importance of this moment, because if impact fix was built by reverse, it means that it's very important point for the whole big time frame, and it means that big players are inside. Have a look how it was. It was very classical. We had impulse, fix. Then we have activity of sales guys, new activity, and then we have balance, 2 weeks balance, and then repositioning, which gives us perfect idea about the importance of this reverse when we evaluate, when we make an assessment of this repositioning, put this repositioning in statistic compliance, we understand the importance of this action, and that how was this fix built. And actually in practical way it gives us opportunity to be inside this reverse, because after respond activity, which was very huge and was a combination of future volatility and volume, and it was overnight volume and over week volume. Here we see the filters here. Rotation and the timing and rhythm of the weeks gives the opportunity to sell, to go inside this reverse. Of course, it's not easy and not very fast. You can get this idea, but it's possible. In the meantime, what gives us understanding of this fix? That next step will be balance, and the status of this balance is very huge, and we can find the range of the balance. Fix showed us the range of the balance, and of course we have a new activity of sellers, and the recent activity is of course by huge buyers who pick up the best price, and they bought the low behind the value area here on the left, and it gives us in the short-term reaction by priority. So we trying to be inside the game of big players who obviously bought 2337 level. Of course, the volatility is very big. However, even this kind of market we use, and we find nice deals and nice trades. Please follow us on our Facebook to discover more, to find out more, and I will be glad to help you and to see you on the next